Well, Chase, you know I built this business in 2007 was my first year.
Yeah, absolutely. That was a pretty crazy year, to say the least, when it comes to the housing market.
Yeah, I was on my hands and knees praying next to the bed at night because there was a run on my bank in August. I took a loan out in 2006, and it was not the best time to get into real estate, any related real estate business at all. Real estate transactions were down. People were losing their jobs, and guess what? We were successful. We sold all kinds of inspections, but you know how we did that?
No, honestly, I don't.
Well, believe it or not, it was the Asian money, Chinese money. I hit all the offices where there was Asians, Chinese, you name it. That demographic, they know how to save. Mm-hmm. And they saved, and they were buying houses when the market was down, and Morrison Plus Property Inspections benefited for that. So let's talk about that.
All right. That sounds good to me. We could certainly talk about a handful of things regarding foreign buyer impact coming into the U.S. and how even in times where it's uncertain, right? Like back when you started the business, and even now where people are starting to kind of get scared away from the housing market, the money from foreign buyers coming in can make a very drastic impact on everybody, right? And so to talk about that today, we brought on actually a special guest, one of our friends here in the industry, Edmund Lin. A quick little background about Edmund. Edmund is a realtor with Pacific Sterling Realty and has a strong architecture, planning, and development background. And prior to joining the real estate industry, he was working on domestic and overseas developments on various scales for over 15 years. These professional experiences and knowledge has now prepared him to protect and serve his clients at the highest level. And his experience adds a layer of surety and allow his clients' assets and equity to grow at an even higher level as well. And so lastly, before I pass to you, Edmund, I also want to mention that you also have your own podcast and show, right?
Right. It's called Real Talk.
Real Talk with Edmund Lin. And so go check that out on YouTube. He's got a ton of subscribers, a ton of great content, by the way. Shout out to you, because I remember it wasn't that long ago. I think you've seen some pretty substantial growth over the last probably year or so with that channel, and you've been doing a really good job. And so,
well, it's not without help from friends like Morrison Inspections, of course.
No, it's been great to see, and the content you're putting out is awesome. I just watched a video the other day. I don't know where you're at, but you're on a boat and you were cruising around, right? And I thought that was hilarious. I know, it was good, just quality content, and I could see why people are grabbing onto you. And so, for those who want to check it out, Real Talk with Edmund Lin on YouTube, and be sure to go take a peek at that. But nonetheless, Edmund, appreciate you jumping on today.
Well, thank you for having me here, Chase and Dwayne.
Yeah.
Interesting that you mentioned about the foreign buyer from about a decade ago, right? That was a very different market, but people are relating to a lot of that these days, talking about maybe there's similar patterns when people want to consider buying houses at different timing and stuff like that. But first thing they need to understand is actually very different animals, right? I mean, back in the days, the whole banking system kind of corrupted a little bit.
Yep.
And then we're talking about a recession. We've been talking about it for about a year now. And right now we are kind of getting to the recession. I mean, just as of yesterday, I still heard people talking about, "Wow, we're not in a recession." I'm like, "Why?"
Oh, we're in a recession.
Such a denial. I mean, that's crazy. But there's a light at the end of the tunnel.
Absolutely,
as you have mentioned. So one of the things I keep on hearing is there's the Asian persuasion is coming again, right? Folks from China in particular, they've been, you think we had it bad with the COVID situation. They really had it bad. They've been locked up.
And they're still feeling those impacts right now. Today.
Very, very restricted.
I hear people are getting locked up in their homes.
They do. Not just locked up, they got boarded up. Like they actually,
like you're being welded, like doors welded shut kind of deal.
Wow.
Right. So, I mean, without getting into too much nitty gritty details of those, it can be pleasant, right?
Absolutely.
Right. So I think that in one way or the other, set out people's mind, because a lot of people, mind you, at the peak of the COVID, actually decided to go back to Asia countries because they thought America is just not a safe ground. People disregarded the rules, don't want to wear masks. and for safety concerns and whatnot, they decided to go back because it just seemed to be a smart choice. Now they're regretting it because they're all locked up, and at times the freedom, the basic rights of human beings are being taken away from them. That being said, they had money, right?
Yeah,
I mean,
absolutely.
particularly, they've always thought about being frugal and saving up and purchase property. And what better investments, mind you, are better than real estate investments, right?
Yeah, very little out there, right? And especially people coming from overseas, real estate and owning property here in the U.S. Is a security that really can't be overstated, right? And it's an asset that a lot of people try to take advantage of.
So, not sure if it's legal or not, but people have been purchasing properties with foreign exchange, like foreign money.
Yep.
So people would actually agree upon the price, right? And then they would actually do the exchange, through money from over there, but they pay for the services like inspectors, us realtors, and whatnot to make sure the compensation is taken care of. Now, people kind of start shun away from that because they feel that, well, it's not really safe. I mean, how do you monitor that, right? In China and whatnot. So a recent trend that I've been noticing, I have people coming to me and ask me, hey, is there an actual place for a foreign exchange? They want to exchange that money to U.S. money now, and then actually have the transaction done correctly in here.
That makes sense.
For us, it doesn't really matter as long as the money is there, right? I mean, you can prove that you came up with the money and the transaction can be done, the escrow can be closed. So I've been seeing a lot more of that now. So people who's doing foreign exchange, they're laughing their way to the bank.
Wow.
And then on top of that, I've been hearing people wanting to get out. Get me out of there. If I can't get out, at least get my family out and stuff like that. To the degree that it sounds a little devastating at times.
Oh, I can imagine.
But in the next few months, though, and that's just what I heard. People are kind of preparing for that. Or the EB5, EB3s, and EB whatever said they're coming back. I mean, it's a long time, right?
Yeah.
And but nonetheless, people want that because they've had it. It's just fed up,
Well, the economy over in China has been just kicking butt, man. I mean, over the last 10, 15 years, it's been great. As people have been coming, going, and wherever the grass is greener, people are going there, right?
Oh yeah.
But right now, it's good to hear that some of the money's coming back this way.
It is. I mean, in the past 2 years, incidentally, I mean, as we struggle in the States, right? I mean, when people are losing jobs and restaurants are closed and stuff like that, imagine, that took a huge toll at China's economy as well.
Oh, I can imagine.
Because the government is a lot more centralized. The way that they're doing things, and a lot of the news are filtered too.
Very much.
While we get to hear, a lot of times it does not represent exactly what's happening over there, right? And and what I heard is an Asian American, is probably and on top of that, people spread rumor as well. So
of course.
You don't ever. I mean, we all went through that with the peak of COVID.
Oh yeah, 100%.
People still toilet paper and all that stuff.
Yeah,
It still baffles me to this day. But I think there's certain truth that this is happening where people are actually considering coming to the States. And that being the case, I do want to kind of bring up a discussion about our current home prices, right? Right now, I think the average home price, considering what we had from a few months ago, has dropped about 15%.
Well, that's good news.
Yeah. But on top of that, you got to remember, we were comparing the sales price. And at the peak of the summer, that's when people are adding, 8, 10, 12% on top of what's been listed.
That was pretty wild.
Yeah, it's a wild game. But if we're talking about a 15% drop, deducting from that 10% inflated price, then we'll really drop for about maybe 5%.
Well, and interest rates went up, right?
Right.
So when the interest rates go up, prices should soften, right? I mean, you gotta balance it out because people can only afford so much sometimes, and isn't it true? People tend to buy the max limit they can afford.
Well, yes and no. And well, a better example, during summertime, people do, go for that. But on top of that, they still got to come up with the differences between the added price of the 10%, right?
Right.
The property is not going to appraise.
No.
Where are you going to come up with that money? Well, people find ways.
Yeah.
But it's a kind of a weird market right now because, like what Dwayne is saying, people are a little unsure. If anything, confused.
Yeah, I think that's a great way to put it. And so with your thoughts on the conditions in China, and how you were talking about how foreign buyers, specifically from that region, wanting to come over here.
Right.
When do you think we'll feel a direct impact from that, if that time does come, where we start seeing a more influx of people move in this direction? Are you thinking this is coming around next spring after the new year? Or when do you think we'll actually feel the physical effects of that?
I mean, I'm no wizard.
Oh, of course,
can
right?
be guessing that.
Your
but
best guess,
but
right?
if I have to make an educated guess, just exactly like what you said, it's like here. I mean, historically, we don't sell a lot of homes during wintertime.
Yep.
Because just don't want to do anything during the holidays.
Yep, makes sense.
Well, it's cold outside.
It's cold outside, and then and Chinese people, I think they're very much the same way.
Okay,
when it
makes
comes to
sense.
Chinese New Year and stuff like that. So if anything, maybe after the spring, I
Okay.
think you're gonna see the first wave.
I've been telling, because I have to provide a lot of leadership to our franchisees and just our staff, and I've been advising everybody, look, we've been very busy the last few years, right? And we've been so busy that we've missed a lot of personal time to do personal things.
Right.
And I've been telling everybody, hey, look, I mean, I normally mention this during the holidays in January, February. If you want vacation, take it now. But I've been telling everybody, if you got a dog, go walk your dog. If you got some time off in the afternoon, go, work on your relationship. If you have a spouse, use these next couple of months to do some positive things in your life where if you have more time than you had before, because I believe come March, April of next year, we're going to flatten out. And then we're going to, depending on how things go next year, that's where we're going to end up. I don't think we're going to go any lower than where we're at coming out of winter this year. I think that the supply chains will hopefully get better. The supply chains have hurt us a lot.
Yeah.
And that's a direct result of COVID. I mean, that was the big bad thing that came out of COVID, the supply chain. And then we had interest rates. So now we got supply chain, a little higher interest rates. I think interest rates are still great.
Yeah.
I mean, it's not like we're paying 12, 14%, to buy a home. I mean, they're low. They're what, 6-7%, right?
Still good.
It's still outstanding.
Yeah.
I mean, come on. I got a credit card in my pocket I pay 18% on. I mean, really, you know what I mean? And it's like, I don't bat an eye at that. But for homes, you have a very low interest rate, and it's an outstanding time to buy a house. Housing prices are going to continue to soften a little bit more, I think, for December, January, and in February. I don't think they're going to raise interest rates again this winter. Hopefully, if they do, it'd probably be moderate.
I heard they're not raising it on us folks, but maybe on the banks.
Yeah,
so
right.
It doesn't affect us as much.
So that's great news. And then inventory, we're having a little bit more inventory, which is a positive thing too, right?
Oh yeah.
So that's helpful too. And then I'm telling you what, I like to go skiing in the mountains a lot. So I drive through Hesperia, Adelanto, Victorville, the Inland Empire, and here in Southern California. And the developers are building like crazy.
Yeah.
And so more inventory, that's more money going to the economy. In the property inspection business and termite business, which we're in, we drive the freeways a lot. And all over the years, I tell everybody, when you see a lot of trucks with a lot of goods going up and down the freeways, and you see construction materials on those trucks, we're doing well.
Yeah, absolutely. And well, question I have for you, Edmund, would be, so talking about the interest rates Dwayne mentioned, they're still, in all reality of it, pretty solid. It's pretty solid numbers, right? I mean, I think I was reading and like watching, I forget the gentleman's name, but he was talking, he basically listed out the interest rates over the last 50 years. I think the average of the last 50 years is like over 10% or around like 10 or 11% when it's all said and done, right?
Even if you were conservative at 9, that's way higher than we're at now.
Yeah. And so the effect right now everyone's feeling, I think, is coming from the non-reality situation of 2 years ago or a year and a half ago when it was at 2%.
Oh yeah,
That's just not that's just not the real world. We happen to be in that market.
That's like free money.
Exactly, right? And so that's not typical, right? So now that we see an increase, that increase hurts more because people saw what they could have gotten, right?
yeah,
Right.
What is the mindset difference between foreign buyers in comparison to people already in the U.S. looking to buy? Do the interest rates affect them mentally as much in comparison to, you feel, maybe people already here?
Yes and no. No, in the sense that a lot of them are using cash, right? So for them, that interest rate, that means nothing to them. But the housing price will, because when the interest rate is low, with the whole housing price and all that stuff,
And then it's way over asking.
Yeah,
That's something a lot of Americans don't understand and can't wrap their brain around real well in our country, because we're big on debt, loans, all of that, right? Americans aren't great savers. But in foreign countries, if you want to buy a house, you got to pay cash. I mean, not so much now in the last 20 years, but you go 20, 30 years ago, if you didn't have cash, you didn't get a house. I mean, I'm German, and when I was a kid, we went to Germany back in the 70s and the 80s, and if you couldn't buy your house, you couldn't buy your house. It was very rare somebody got a mortgage loan. That just wasn't how they did transactions.
Right. I mean, here we think about leveraging, right? Borrowing, money to pay for your dream home and all that stuff. So let's talk about the 2%. I mean, it's unreal. I don't think it's ever coming back. So guys, stop being a baby, right? I mean,
exactly.
People talking about, I could have 2%. Well, you know what? You didn't buy a house when we had that 2%, did you?
Yeah.
Right. And that's the same mentality that's going to hurt you when you have the 6%, 8%, 9%. Doesn't matter if it goes to 20%, you're still not going to buy a house. But you know what? The rent that you're paying right now, that's 100% interest. Have you thought about that?
Yeah.
Right?
That's exactly correct.
And then you would rather take that and not having any ownership whatsoever and not having any equity growth on that whatsoever and be okay with that. Yeah, then keep on finding excuses for yourself not being able to kind of find a home,
What do you call it? Remember you had the saying when you overthink things? What's your phrase?
Analysis paralysis.
Yeah.
Right? You're thinking so much that it locks you up for making a decision, which is funny because it's like, you can never talk to your client and be like, you're acting dumb right now. You need to see it this way. Just go ahead and get in the market, right? You can't treat clients like that in the industry.
Well, no, Chase.
Right?
What we really want to do is we want to go to Home Depot, buy 2x4s, and whack them over the head with it.
to have them.
Let me be part of that,
right? to see them, have them see the light, right, and understand that, hey, it's more of a game of affordability, right? If you can afford it at 6% or at 7% or 8%. There's no good time to get in. Just get in at that point. Any point it drops below that, then the whole refinance game, right? Which it's just funny because people, I know countless people that were pulling their teeth during the 2% times of being angry that they couldn't get in because they're getting outbid, or there's a line of 150 people at an open house, right? Trying to get in down the street.
Well, that was tough,
right? Which understandably, that's frustrating because you're eager to get into a market like that. And then what did they do? They put the brakes on it and say, you know what, I'm going to wait for the market to level back out to where home prices aren't so competitive. And then now that we're in that position, now it's the complaint of 6%.
Well, let me tell you a little story. A very close friend of mine, who's a home inspector, used to live in Glendale here in California. And 4 years ago, he was telling me, and some of my family members telling me this, prices, the bubble's bursting. The bubble's going to burst. I see it on the news. They're talking about it. And I was looking at him going, I don't see that. Interest rates are great. I'm real world with doing inspections. I know what's going on. I'm not seeing it coming anytime soon. He sold his house, moved into an apartment based what he saw on TV. And you know what? His house went up like another $200,000. He lost $200,000 at least. And I was like, "What are you?" I couldn't say anything.
Right.
I'm like, "You don't need to." Real estate never goes down. I went to college, and they used to teach us in college. There's one investment that never goes down, and that's real estate.
Yeah.
Sure, your prices can soften a little bit, but as far as a long-term investment, I mean, of course, over a couple of years, I mean, even just a couple of years, you're never going to lose your money in real estate, unless, of course, you buy some swampland in Florida where it sinks. you know, right? I mean, that's just kind of, ignorant, but, or something you've never seen, that's in some place that's not real and you let somebody swindle you out of your money. Yeah, I mean, foreign buyers really got a good opportunity right now with the prices softening, these great interest rates. And I hope that we can see a lot of them because I want the success of my business to be built on that over the next couple of years. And I'm going to be advising a lot of our franchisees. If you've got foreign real estate agents, in offices, go pass your cards out, man, because they got a direct pipeline to probably some really good people that are going to invest in real estate.
Oh yeah. I mean, well, there's a lot of heresies out there, right? I mean, people talking about, this could happen, that could happen. A lot of them have no basis foundations. Choose what you to believe, right? But at the end of the time, do a little research.
Yeah,
so you see what's behind it.
Yeah, everyone can have an opinion and guess, right? And you ask a group of 10 people, you get 10 different answers in terms of what they think is going to happen, right? And so it's all about educating yourself and kind of figuring it out for yourself. And so something that I want to kind of move into is, so talking about, I like the point you made, Edmund, of foreign buyers, there's more of a trend to see cash purchases. Now, interest rates are kind of out the window because you don't need them at that point, right?
Right.
And so let's talk about non-cash purchases and the recent increase of loan limits that just got released. And so I don't have state-by-state lists of what each one is allocated towards, but the baseline average across the board for a 1-unit property is a loan limit increase of about 80 grand. And so I can imagine that playing a pretty significant impact on what we're going to see over the coming months in terms of opening the doors for people to maybe get into a property now.
Yeah, I mean, if you, that's why I was trying to say earlier, a lot of people tend to buy the max they can afford, which I think is a great advice, right? Because if you can invest as much as you can into an asset, which real property is an asset, that's like saving as much as you can in a savings account, right? It's good, except for the asset you're investing in is going to appreciate and build equity. So if you can afford it, buy as much as you can. And now the banks are giving you more money, to invest into a property that maybe is something a little bit more than what they would have given you before. Now, I think you still have to qualify for more, right? Right, Ed?
Absolutely. I mean, I love how Dwayne is, his way of thinking, right? A lot of people are thinking, oh, well, that, if it's a bigger limit, that just means I'm going to get myself into a deeper pothole, right? Like, more debt and all that stuff. Well, you're not thinking about equity. The beauty of the gain of real estate is about equity, right? Investment. You're buying something, and then in a few years it's going to return, and then you're sitting on that sweet equity, and then you can talk about maybe doing further investments and stuff like that. So there's always two sides of things, right? If you see everything you see is negativities, then it's very hard for you to, and then you're probably the person who didn't make the purchase with the 2% interest anyhow.
Yeah, probably.
Well, positive. So we're talking about positive cash flow and negative cash flow. I want to talk about negative cash flow. So even if, say for you investors out there, if you want to go out and invest into a rental, right? You want to go buy, say you got some extra money lying around. Obviously, you're going to lose money if you put it in the bank, right? Because of inflation. You put $10 in the bank, in 6 months from now, it's only worth $8. So why would you put it in a savings account?
That's right.
So if you have money and you want to go out and get a rental property, whether it's a duplex, whether it's a single family, or even a condo, I did that a few years ago, and I still have negative cash flow on that property. I could raise the rent right now and be break even, but I have such great renters. I don't mind losing an extra couple $100 a month because I, in my opinion, they're maintaining my property, and I'm not going to have to pay a lot of money if they ever move to ever fix it back up. But I have a negative cash flow with that property of maybe like $200 or $300 a month. But my appreciation is, I bought it for, I can remember like 400. We'll just round it $500,000. It's now worth $850,000.
Yeah,
and this was 4 years ago.
So that negative cash flow isn't even touching what the equity built on it.
It's ignorant. Going on. It's ignorant. You multiply $200 by 10, right? That's $2,000. Okay, $2,400 a year. that could be, I mean, that's $10,000 in the course of, 4 years, right? Well, in the last 4 years, I've made hundreds of thousands of dollars, right? And so you can't go down to the granular micro on that. I mean, it's very important to just see the bigger picture. Now, are we going to see homes go up that much in the next 3 or 4 years? Oh, I don't think so. However, you're going to make, I mean, I guarantee you homes are going to go up more than 10,000.
Yeah, I mean, you're not gonna look to get that kind of raise at the end of the year, right?
Right. I mean, even if you're negative $400 or $500 a month on a rental, that's a good deal.
It is. I mean, I have people come up to me. I mean, the most popular question these days: hey, when do you think it's a good time to buy? Well, when do you think it's a good time to eat?
Yeah.
If you're hungry, you gotta eat. I mean, if you're sick, you gotta see a doctor. That's just how it is.
Yeah.
I mean, so how come when it comes to real estate, none of the common sense applies anymore?
I don't get it.
Yeah,
that's a great question. That's a great question because I mean, whether it be real estate or any kind of investment type of purposes, I think just the over analysis aspect of it, of just always trying to, and typically it's always stemming out of a negative, risk adverse type of mindset, right? Where you're thinking, what could go wrong? What are the areas that are going to hurt me, right? Versus the opposite end of. An example what you just gave, Dwayne, you could have not invested on a property because you're like, oh, this is going to hurt me $200, $300 a month, right? And your risk adverse mindset would tell you, don't do this. You're going to lose money on this every month. But you go the opposite end of this, opposite end of the spectrum. Well, you just already laid it out for us. The equity you built way outweighs the negative aspect of going down $200 a month, right? And so the mindset shifts. For I think most people and most buyers, that's what's going to take for them to kind of get over the hurdle of what they're hearing in the news and hearing in daily life.
I'll tell you, there's one thing that you have to understand to make an intelligent purchase to buy a home. Can you afford the mortgage? And are you confident in your career or your job that, that you're going to be able to have your steady income for the next 4 or 5 years? If you feel like you're not going to lose your job and you can be able to pay the mortgage, then buy the house.
Yeah.
I mean, that's it. It's not any more than that. Unless you are a Warren Buffett and you are a guru. I mean, what are you doing? You don't know what's going to happen with the market. You know nothing. Just go get the mortgage. You can make the payments. You can make the payments for the next 4 or 5 years. You can't predict the future. Just do it.
I mean, when I purchased my first house, right? The day we actually closed the escrow, I lost my job.
Whoa.
Right.
Whoa.
And that was during the peak of 09, I think.
Okay.
Right?
Okay.
So everybody was losing their job, little by little. I was worried because at that time, I think the interest rate was about 4.3, which is still pretty great.
Oh, yeah, absolutely.
But not having a job, well, my wife still has her job, right? But we were worried. Hey, are we gonna make it? Because we thought at that time, we're gonna maybe have a short sale and stuff like that. Never happened. Not only did that not happen, actually they made a separate purchase in China as an investment property.
Oh wow!
So life finds its ways, right? I mean, through helps, friends, families, and whatnot, opportunities, savings, and stuff like that. Things can work out, and then a lot of times, you got to be a little more headstrong, right? And kind of take that leap of faith and do something about it. But if you never, you have an instinct, sometimes you just got to follow it. When you don't, and you don't take any risks, particularly calculated risk, we're talking about here, in a couple of years down the road, be like, oh, I should have, could have, all that stuff. It's not going to help you much anyways, right?
Well, I was just meeting with my brother-in-law yesterday to get some mentorship and some advice on some decisions I'm making in business. And somehow this came up.
Oh, yeah.
And we talked about investment and, where he feels the most comfortable is, borrowing money, right? He hasn't always had positive cash flow. And sometimes in real estate, it's not positive cash flow. You're paying in. But you know what he said to me? He said, I'd much rather borrow a property because guess what? Your risk is nothing. Who's taking the risk? It's not you. You're not buying it. Think of it correctly. When you buy a house, you might put some money down, but you're not buying the house. Guess who's buying the house? The bank.
Yeah.
It's the bank that's taking the risk. The stockholders and shareholders who own all the stock for that bank, they're the ones buying the house.
Yeah.
And they're the ones taking the risk. You're just making a promise you're going to pay them back.
Yeah.
What a deal is that? And so if you can't pay for the house and all you got to do is give it back.
Yeah.
That's all you got to do.
Mm-hmm.
They're not going to put you in jail. I mean, what risk are we really taking here? You're asking people to take a risk on you, and they're doing that. And if the bank feels, and my dad, actually, I'll tell you a story real quick. When I was in the Army, I had been in the Army 3 years, and so I had a little bit of credit. I was 22 years old, and I wanted to go buy a new car. And GM Motors, it was a Geo Metro. They'd just come out. It was a 3-cylinder. It was brand new. And I wanted a new car. I was all proud. I went and I applied for the loan and they denied me.
Oh.
And they said, you need to get your dad to co-sign for you. Well, my dad looked at me and he said, if the bank thinks that you're too high of a risk, then I think you're too high of a risk.
Oh.
I am not going to sign on this loan. And I thought, and so, all right. So, well, anyway, 2 weeks later, they called me back and they gave me the loan.
Oh,
that's
nice.
a good story, right? But I learned a lesson.
Mm-hmm.
I wasn't buying the car. It was GM. The people that own the finance company are the ones buying the car.
Mm-hmm.
They're just allowing me to service the debt. And if the bank qualifies me, they're very smart people, they know who to give the money to.
Mm-hmm.
If they think I'm worthy of servicing the debt, so the mentality there is if the bank will approve the loan for you, you must have it going on.
And I think a lot of people don't recognize the ability of understanding what the difference between a liability and an asset is.
Yeah.
Right. Because majority of the people, they want to buy stuff, which stuff depreciates, which is a liability.
Mm-hmm.
So because they don't teach you in school growing up here in America that buying houses is an asset, creating that the debt, right, is essentially creating equity for yourself, where a lot of people want material things because of status, right? So that's just a mindset in our school system that people say, oh, you buy a car, you buy your clothes, you buy all these things so you can look rich. But rich people buy assets to create equity. So they build wealth.
Well, rich people use other people's money to make money. If you ever watch Rich Dad, Poor Dad, he talks about that all the time.
Yep.
And so believe it or not, I have 3 properties. I don't own any of them. The banks do.
Yeah.
But I've made a lot of money off their money because my properties have all appreciated.
Right.
And it's wonderful.
Well, talking about the beauty of leveraging, right? I mean, sure enough, we have cash buyers and all that stuff. Well, I mean, once you purchase property, it does the same thing for you.
Mm-hmm.
Right.
But why wouldn't you want to, as an investor, spend the minimum amount of money and let other people's money work for you?
Right.
I mean, so real estate is one hell of a game. You definitely want to get into.
You just have to
It
service the debt and make the payments every month.
Yeah,
I mean,
it is.
And that's something that if you make enough to do that, it's pretty cool, and you should be doing that. I mean, otherwise, who are you? You're somebody that's renting and paying somebody else to service like my renters. You know what they do?
They're servicing your debt.
They're servicing my debt.
Yeah.
And that's good too. They get what they want. But they even asked, they wanted to buy the house, and we're like, nope, I don't want to sell you the house.
Yeah, it's typically a good deal. But I like kind of as a final point here, what you made, Dwayne, was if the bank's going to give you the money, or they agree to give you the money, they're very smart people. They have a testing base in terms of the entire U.S. nation. They know their numbers, and so who they're pulling from and what they're willing to give you is like pretty tried and true. They know that you're capable of paying it back, right? Because at least for the most part.
Well, especially after the real estate bubble burst with all the subprime loans, the banks had to get their act together.
Yeah, big time. And so now, just understanding that, hey, if they're willing to give you it, you more than likely are capable of obtaining that loan, right? And taking over that note and paying it back for it. But it's kind of interesting just hearing all the different mindsets coming from different people. Edmund, with your knowledge coming into the conversation of foreign buyers, it sounds like you have investment property overseas as well too. And so, You got a point, Dwayne?
Yeah, before we wrap up today, I just, Edmund, I want to hear it. Are we getting money from China?
I definitely think we are at some point. I'm personally looking forward to it. Next year.
The Chinese money is gonna start flowing in here, at least into Southern California.
I believe so. And then I just think people should start getting ready. A lot of realtors they're losing heart. They're thinking, I better change my position. I better change my career. I'm like, man, it's only been a couple months.
Yeah.
Right? I mean, stop being babies. I mean, I'm telling the same thing to the buyer. I'm telling the same to my realtors now. Come on, guys. You got to feel a little lifted up.
Yeah.
What are you afraid of? You got great companies like Morrison Inspection backing you up, right?
Yeah.
You got people telling you, and then all these are calculated risks. If your buyers are not worrying about it, why are you worrying about it as a realtor? You should focus on your job and provide guidances, right, to these buyers and provide a little surety, right? I mean, and start panicking and make your buyers panic too. You're not doing your job properly, guys. Come on.
Yeah.
Well, I'm excited. I mean, I remember the last time. I know it's not the same market. I know it's not the same scenario, but man, it was pretty cool seeing the people that have cash buying houses, and you want to partner with those people.
Yeah, and then mind you, we actually have a lot of investors who have money in their pocket right now, in the States as well.
Oh, big time.
Yeah, and then they're just sitting on it and thinking about, I'm just gonna look for the button and then and try to kind of buy as much property as we can. Well, we just don't know when that is coming. But we're talking about foreign people coming in and purchasing property. The pricing may not deflate like you think it might. So at some point, again, when is a good time to buy? You want to think about that, and have an answer for yourself.
Big time.
Yeah.
Big time. And we certainly appreciate you jumping on today, Edmund, and kind of giving your thoughts on the topic. We always love hearing just different opinions from different realtors that we're working with, that we work closely with, and then everyone coming in with their own certain kind of expertise and knowledge on certain subjects. And so appreciate you again jumping on today.
Thank you for having me here.
This is a fun episode. Hopefully people are able to have some positive takeaways from this, right? About the mindset shift and understanding the reality of the situation.